Okay, so this video we're going to talk about taking losses and more specifically losses that gave you a confirmation for an entry. Okay, there are going to be times where you have beautiful confirmation entries that you can, like, there's no way you can make them up, that you see every single alignment happening. You say, okay, this is, I know for a fact in the back of your head, obviously, overall, you don't know ever what's going to happen in the market, but you're saying to yourself, in the back of my head, I know that this is very likely going to be going in my direction. I've got all the confirmations I need. Boom, I take a trade. And what happens? You take a loss. And that happens. That's going to happen. You are going to take losses off of perfectly set up, perfect trade setups, because nothing is 100%. Nothing is ever going to be 100% accurate. And you need to accept that and get over that in order to advance on to becoming a better trader. And so this lecture is talking about taking losses, and more specifically, taking losses that gave you a clear entry signal. Because again, it's going to happen. It's going to be a part of dealing with trading. It's going to be part of the lifestyle of trading. You are going to have days where, God, that was a perfect trade setup and it wicked my entry and then it ran without me. Or, God, that was like a confirmation in a confirmation in a confirmation in a confirmation, and I had the perfect pending order, but it traded right through it and just kept going in the total opposite direction, and I was just wrong. And either scenario or any other scenario surrounding that is going to happen, and you're going to experience times where it's frustrating. You're going to experience times where that really pisses you off because you've been waiting for a week for a trade or whatever. And I'm here to tell you and talk to you about this in this lesson and set your expectation that none of this is 100% accurate. You can be the best smart money concepts trader ever, and you will still take losses. You can be on a winning streak for, days, weeks, and that winning streak will come to an end. You can be on losing streaks and be like, okay, this is the trade, and still take another loss. Like, there are times where obviously any strategy, and including this strategy, don't work. And it's not that it doesn't work in the long run. I'm saying it doesn't work in that specific trade that you're framing, because either A, you were wrong, B, you were right, but it wicks the low that you were under or that you were trading for a liquidity grab, and it runs without you. Or C, it's a combination of everything. You're just off, and that's okay. And so I want to set the expectation that you can make great money being 50 to 60% accurate, and obviously even better if you're more accurate than that. And as you try to improve your accuracy, your trade amount will go down, which we've talked a little bit about. But you need to understand that, the more confirmations that you wait for, the more likely or the less amount of trades you're going to be taking. And even if you are waiting for all these extra confirmations, you're still going to be taking losses on top of that. Okay. So I just want to set that expectation for new traders coming into this. I know that there's going to be over time a mix of absolute total brand new beginner traders all the way up to advanced traders. And this needs to be said for those beginner and also those advanced traders. Like, you're never going to be 100% accurate. You're never going to be consistently, probably even 80% accurate. Maybe you are, but I don't strive for that accuracy in my trading, and you don't have to do that either. And so a lot of this is more for like the beginner traders coming into this, to understand that you do not have to be 70% accurate. You definitely do not have to be 80% accurate. You definitely do not have to be 90% accurate. You probably won't ever be 90% accurate, and you certainly will not be 100% accurate. And no matter what setup you see, no matter how many confirmations you take, there will be times, or how many confirmations you wait for, there will be times where you have the absolute most beautiful setup and your stop loss still gets hit. And I just want to remind you of that and set that expectation. And now let's talk about a few examples that happen to me and happen to other traders all the time, and that are part of trading. Okay. So I'm just going to stick with our examples from the last episode. And let's say, for example, we have this demand zone that's been mitigated, and for whatever reason, we are now expecting price to come back in and do this and continue. And we have a pending order set right here. Stop loss just below this low. And let's talk about some of the possibilities that can happen here. Okay. So, possibility number one, price literally wicks that low and wicks your stop loss by like half a pip or a micro pip or something, right? What does that mean, or what happens, or why is that? And this is my understanding of why that happens, and many other people's understandings of why that happens. There was a lot of stop losses underneath this low, and smart money wanted to take those out to use that as fuel for this move, right? And so after a move like that, you would usually see a very impulsive move up that would be, you wouldn't be able to just like jump back in safely at least. And so you can, I guess, let me back up. Let me rephrase that. If you see this happening, there are times where it's like very obvious, like, okay, this was a huge wick on the 15-minute, and then you get like a change of character and a break of structure, and you can trade that. You can just get right back in. However, psychology, more specifically to your psychology, are you specifically going to be able to do that, to take that loss and then get right back in and hold it up there? Or are you going to start thinking, well, maybe the market reverses, maybe it's getting ready to do this, maybe this is a change of character on a higher time frame, maybe this, maybe that, and this is just part of it. Like this is going to happen to you throughout trading, and you need to understand this. And the reason why I'm telling you this is because so that you can prepare yourself and arm yourself with what you're going to do in situations like this. Because if you're down on the 1 minute and this happens, this move right here might be happening in 10 minutes, and that's not very much time to react on a 1 minute chart. So that's why I'm bringing this to your attention. Okay. And let's go over a few more examples of what could potentially happen. So obviously, if you're setting a pending orders, like depending on what time frame you're looking at here, price could also just trade right through it. This could be some type of news event, or perhaps, the swing structure, the demand zone from swing structure down here needed to be mitigated, and it's combined with news. Like there's obviously many different scenarios, and I can't touch on them all, and I would also never know all of them that are going to happen. But price trades right through your POI, and you had a pending order here. Well, you're going to take a loss, and then price is going to come down, and in this example, mitigate a demand zone that's back here or lower in that range, and then continue. Are you going to be aware of that as a possibility, first of all, in your trading, and you're just taking a riskier entry here because of the momentum behind price? And also, if that does happen, are you going to be someone who looks for another confirmation in here to get in, or do you already have a pending order set down here, or what's the scenario, and how are you going to react in that? And there's going to be situations like that where you take a loss, where you're like, oh man, I really thought that was going to be the pullback, and it continues, and it would have continued, but it trades lower in order to continue. And overall, you're right on the direction that it's heading. It just needs to mitigate lower. Okay, that's going to be another example that happens. There's also going to be just times when price trades right through your stop loss, and it just reverses, and it just goes like this. And that's also okay. Price can do whatever the hell it wants. It doesn't have to respect our expectation. We have zero control over the market, and situations like this will happen. And ultimately, when you zoom out and you go up in time frames and you see what's happening, it will then say, aha, it makes sense. And then you can, go short here, or whatever the situation is, whatever the scenario is that's being presented. This is more so not necessarily about the strategy of trading in general. It's more so about the mindset behind taking losses when we have an expectation of what we think is going to happen, right? And so just preparing yourself for that, understanding, first of all, that you do not need to be 100% accurate. You never will be 100% accurate. And you can make great money being 50 or 60% accurate. And then second, understanding that even if you have the most beautiful confirmation trade that you think is going to be the trade of a lifetime, you can and will still take losses from setups like that.